Welcome to Talker Tickers. Today, we're digging into Silvaco's Q2 2025 earnings call. And let me tell you, this was a quarter with a huge miss, a stock that got hammered, and, believe it or not, a really bold turnaround story in the making.
Okay, so here's what we're going to cover. We'll start with the headline numbers that really shocked everybody. Then we'll dig into what's going on behind those numbers. After that, we'll look at management's plan to fix things, the new CEO they just brought in, and finally, I'll wrap it all up with our call on the stock.
All right, first things first, that earnings miss. Man, this was a quarter that really caught the market off guard and sent the stock tumbling. Let's get right into just how big that disconnect was.
Wow. Yeah, that's the number that really tells the story. A negative 77.8% surprise on their adjusted earnings per share. I mean, look, in the world of earnings reports, a miss like this isn't just a red flag, it's a full-blown five-alarm fire. So this table kinda lays it all out. You can see revenue was about 15% shy of what everyone was looking for. And, well, when your top line is that weak, it just flows all the way down to the bottom line, which is what drove that big earnings miss. So, no surprise, the stock got absolutely hammered the next day.
So what exactly went wrong here? Well, when you start to peel back the onion, it's not like the whole company just fell off a cliff. It's actually a story of some real weakness, but also some surprising bright spots. And this chart really shows you what I'm talking about. Look at the split. Their main business, TCAD, that's technology, computer-aided design, it just got crushed, down 34% year over year. But then, look at the other two segments, EDA and SIP. Both of them posted solid double-digit growth. It's like two different companies in one report.
And you see this exact same weird split when you look at bookings. Gross bookings? Yeah, they were down big, tracking right along with that TCAD weakness. But, and this is a big but, management really wanted everyone to focus on a different number, their trailing 12-month annual contract value, or ACV. Think of it as a way to smooth out the lumpiness of big deals. And that number, it was actually up 26%. So they're basically saying, hey, look past the quarterly noise. The underlying business is actually pretty healthy.
Okay, so despite this really ugly quarter, management's message on the earnings call was surprisingly forward-looking. They basically said, forget Q2, let's talk about the future. And their whole story revolves around a super aggressive acquisition plan. And here's the quote that sums it all up. The CEO basically said the whole point of their IPO was to raise cash to buy other companies. So their number one growth strategy? It's M&A. They took that IPO money and went on a shopping spree, plain and simple. So their playbook is pretty simple, right? Step 1, buy up cool tech. Step 2, by doing that, you massively expand your potential market, your SAM, as they call it. And step 3, unleash your global sales team to sell all this new stuff to both new and existing customers. Acquire, expand, cross-sell. That's the plan. And you can see just how confident they are by looking at the guidance they put out. I mean, check out that Q3 revenue range. After doing just $12 million in Q2, they're guiding for a huge jump. And they stuck with their full-year numbers too, even suggesting they could get back to profitability on an adjusted basis. I gotta say, that's a really bold call after the quarter they just had. So you're probably wondering, how do you get from that terrible Q2 to that super strong guidance? Well, there's a huge piece of the puzzle we haven't talked about yet, a massive change at the very top that happened right after the earnings call. I mean, look at this timeline. August was just a whirlwind for these guys. On the 1st, they close a big acquisition. Less than a week later, they drop that bomb of an earnings report, and the stock gets crushed. And then, just 2 weeks after that, boom, the board brings in a new CEO, Wally Rhines. And this isn't just anybody. This is the guy who ran Mentor Graphics for years, a real legend in the industry. So this really is the multi-million-dollar question for investors, isn't it? Is this new CEO, this proven leader, the key to making this whole thing work? Can he come in, take all these companies they've bought, and actually stitch them together into something that hits those ambitious targets? All right, let's put it all together. You've got the bad quarter, the crazy strong guidance, and the new superstar CEO. So what's our call on Silvaco as we head into the next report? Okay, so for Q3, our prediction is they're going to beat. That guidance looks aggressive, but we think those deals that slipped from Q2 plus the revenue from their new acquisitions will push them over the line. But, and this is important, we expect the new CEO to be pretty cautious in his commentary. He's going to be talking about the hard work of integration, not promising the moon right away. So for our official rating, we're starting this off with a market perform.
Look, the turnaround story here is really compelling, and getting Wally Rhines as CEO is a huge win. But the execution risk is still super high. We need to actually see them integrate these acquisitions successfully and get that core TCAD business growing again before we can get more bullish.
Now, for any of you who are a bit more tactical, here's a potential trade idea. The whole thesis is that the market just doesn't believe the guidance after that Q2 disaster, and they might be underestimating how quickly the new CEO can make a difference. So one way to play this could be to buy some short-dated, out-of-the-money call options before the next report. It's definitely a high-risk, high-reward bet on them delivering a big beat-and-raise quarter.
And as always, please remember, this is not financial advice.